Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures pointing to gains at the open, and the Nasdaq Composite set to open at a new record high. It's the top performer this week, up nearly 3%. Even with the flurry of tariff headlines over the week, markets took it in stride, as they have been. But Bank of America's Michael Hartnett warning that investors are preparing for a pullback. In a new note, he says investors are pulling money out of equities and pouring it into cash funds. Plus, gold prices are surging to a new record. This coming as Trump tariffs that went into effect this week will affect imports of some gold bars. The industry previously understood that bars would be exempt. This is another tariff blow to Switzerland. The country is a top refiner of gold, and it raises concerns about shipping disruptions from other key hubs like London and Hong Kong. And the future of the Fed a little bit clearer, at least for now. President Trump said he will nominate one of his top economic advisors, Stephen Miran, to temporarily fill the slot on the Federal Reserve Board that was vacated by Adriana Kugler. He still faces a Senate confirmation vote, and we'll take a closer look at what this move means for central bank policy. Let's get a check in on stock futures right now. Indications here for a higher open to cap off the week here. We had a big divergence yesterday in the Dow and the Nasdaq. The Nasdaq rising, the Dow falling. All three major averages, though, this morning pointing to gains at the open of between 1/5 and 1/4%. Let's dig into our top stories of the day. Futures higher to end the week following a mixed day on Wall Street, with the Dow tumbling, the Nasdaq hitting a record high. Plus, President Trump nominating economic advisor Stephen Miran to the Federal Reserve Board of Governors to temporarily replace Adriana Kugler, and gold surging after the industry was hit with unexpected tariffs. Joining me now, senior markets reporter Ines Ferre and Fed correspondent Jennifer Schonberger. Ines, I want to start with you and some of the strength that we are seeing this morning, even despite the tariff headlines. And interesting that Bank of America note saying, well, maybe there could be some caution beneath the surface.
Yeah, that's right. With Michael Hartnett of Bank of America writing in a note about what they've been seeing over the past week with respect to money flowing out of U.S. stocks and into cash funds. So basically, their data is saying that for the week ending August 6th, they saw $28 billion pulled out of U.S. stocks and $107 billion put into money market funds. And that is the highest level since January. So perhaps investors are expecting some sort of a pullback. Of course, this comes on the heels of that weak jobs data that we had last week, and then also the rollout this week of these tariffs and the questions on how much they will be impacting earnings. So Hartnett has warned of a bubble in recent weeks. His note also says that the majority of bank clients are expecting a Goldilocks scenario. So that is that the economy is not too hot, it's not too cold, and there's an expectation of lower rates, and perhaps that will fuel the rally later on this year.
I haven't heard Goldilocks invoked in a little while, so I guess it's time for it to come around again. What Hartnett is saying sort of goes along with what feels like consensus right now, in that we are heading for maybe some more volatility in the equity markets.
Yeah, and that's what we've heard from quite a bit of Wall Street strategists, basically saying, look, there may be volatility in August, but dips should be short-lived. You have UBS that came out with a note yesterday saying that the effective tariff rate for the year will be probably 15% when all is said and done, around 15%. Depends on who you listen to. It may be anywhere between 15 and 18%, according to strategists. But UBS is saying, yes, that will have an impact on company earnings, but that is not enough to put the U.S. in a recession, and it should not long-term derail the equity rally that we've seen.
Let's talk about gold, Ines, because that was a real sort of stealth story that the FT came out with yesterday. Bloomberg confirming with the Customs, Border and Protection that it all apparently comes down to coding of imports, right? And which ones are tariffed and which ones are not. And this is really unexpected for people in the gold business.
100%. This has been quite a bit of a shock for the gold market because the bullion market thought it was totally exempt from tariffs. But what this letter that the FT and Bloomberg have talked about that was sent to Customs and Border Patrol is basically clarifying that 1 kilogram and 100-ounce gold bars from Switzerland will be tariffed. So what that means is that those bars are what are the deliverable bars on futures that are traded in New York. And that's why overnight you saw the COMEX gold futures just skyrocket. And in fact, they're trading about $100 above London, because now you're saying that you are going to tariff those gold bars coming from Switzerland. And now this really puts into question sort of the entire trading of gold futures and how gold bars will be rerouted and where they'll be rerouted. And that's why we've seen the New York future prices skyrocket.
Yeah, and there are a lot of questions now about whether there will be legal challenges or whether this was some sort of error on the part of CBP. So stay tuned for more on all of that. Jennifer, we got to turn to you on the Stephen Miran appointment, which was a bit of a surprise here, right? He certainly wasn't one of the names floated. So what happens now? It sounds like he does have to be confirmed by the Senate.
Yeah, he does have to be confirmed by the Senate, which, by the way, Julie, is on August recess right now, not back until the Tuesday after Labor Day. And we know that the FOMC meeting kicks off September 16th, concluding September 17th. So that is going to be a bit of a tight timetable there for the Senate Banking Committee to hold the nomination hearing, vote him out of committee, and then turn to the full Senate for the full Senate to confirm him and then have him sworn in time. Now, Tim Scott, the chair of the Senate Banking Committee, has said he wants to move swiftly. You know, I wouldn't put it past the Senate, right? We got the tax bill passed by July 4th. So, you know, nothing is impossible, but it would be a tight timetable to have Miran at the September FOMC meeting.
And what do we know sort of about him, how he fits in? And just to be clear here, it doesn't sound like he would then be the next Fed chair. He's just gonna serve until January, and then the president will appoint someone else who at that point will presumably be the next Fed chair.
Correct. He's basically like a placeholder or a holdover who will serve out the rest of Kugler's term, which is set to end on January 31st. At that point, the president has signaled that he is looking for someone else to fill the full 14-year term as Federal Reserve governor. And then perhaps that person could be elevated to be the next Fed chair. And this could be the president's only opportunity to fill this seat if Fed Chair Jay Powell decides to stay on the board and serve out the remainder of his term as governor after his chairmanship ends in May. His term as governor is not over until January 2028. The Fed chair has not said what his decision is. Typically, we have seen Fed chairs step down off the board after their chairmanship, and so that remains to be seen. But I do think it's interesting that Miran is very dovish right now, so that would be 3 doves on the committee, and that is a flip-flop from what we saw last fall when Miran was clearly very hawkish, criticizing the Fed when the Fed cut by 50 basis points last September, warning that, you know, they were allowing inflation to become ingrained in the economy. Now we know that Miran is very much in favor of devaluing the dollar to boost exports and narrow the trade deficit. Obviously, he's been a driver behind the president's policies. He thinks that the president's policies, from immigration to trade deregulation, are deflationary. So he's not seeing any inflation from tariffs like most of the rest of the committee is seeing. So he will definitely be a super dove. And if he is in place by September, and the Fed committee does not vote to lower rates, then we will probably see 3 dissents in September.
Right. Yes, I probably can count on him for that. Ines, how is this playing out in the market? The announcement of his appointment here, given some of the views that Jennifer was talking about.
Well, as soon as this was announced yesterday, you saw Bitcoin take a leg higher. Now, to be clear, you saw Bitcoin yesterday that was up also on the executive order, of course, from President Trump that you could include crypto in the 401ks. So that certainly sent the Bitcoin and the crypto market in general up higher yesterday. But we did see a leg higher after that announcement was made because crypto bulls are basically saying Miran is crypto friendly. They're citing an interview that he did with Bitcoin Layer, a research firm, where he talked about financial deregulation and the role that crypto could play to usher in an economic boom. So they are seeing this as very friendly for the crypto market. And of course, if you do have looser monetary policy, that should be bullish for crypto in general as well.
Ines, Jennifer, thank you very much. Appreciate it. Well, while President Trump's sweeping new tariffs are in effect for most of the U.S.'s trading partners, there are still few deadlines that were pushed further out. Here with trade news on the horizon for next week, Yahoo Finance Washington correspondent Ben Worschel. Hi, Ben. What should we be watching?
Yeah, good morning, Julie. Yeah, trade talks never stop. So we had the news this week, but we've got a lot on the agenda for next week. Three fronts, I think, in particular for folks to watch. The first one and the big one is China. There's an August 12th deadline there for China, for the end of China's 90-day pause on their tariffs. They could see tariffs snap back to triple-digit levels if that deadline passes without any action. The word we've heard from Trump's teams over and over again in recent days is likely, a likely extension. We heard it from Commerce Secretary Howard Lutnick as recently as yesterday, but we've been hearing that it's likely for days now. So expect a lot more attention from markets there if we get closer to this August 12th deadline without a lot of clarity on whether Trump is going to add another 90-day extension there. Part of this delay is based on front number two, which is Russia. We're hearing the Trump administration is talking about a summit between Vladimir Putin, Vladimir Zelensky, and Trump himself to end the war in Ukraine as soon as next week. The United Arab Emirates has been mentioned as a possible location there. No details there, but this is important for tariffs because Trump is using tariffs as a kind of key leverage point on his efforts to end this war. We've already seen it with the threat of additional 25% tariffs on India. That deadline is a couple weeks out, but Trump has talked about how other countries could be in line there, including China. China is, of course, the #1 consumer of Russian oil at the moment. They've emerged as a leader there in recent years. Turkey is another country to watch there. They consume a lot of Russian oil, so they could be in line if Trump decides to move forward there. And then the third front is sectoral tariffs. Trump this week talked about new tariffs on semiconductors in the next week or so. I wouldn't necessarily set your calendar there. Trump talks about a lot of things happening in the next couple of weeks, and then we wait months and months for that. But it does come as a lot of tension, a lot of confusion has risen on this sectoral tariff front. He talked about triple-digit tariffs on semiconductors, even after agreeing that they would be 15% on the European Union and South Korea and Japan. Same with pharmaceutical tariffs. He's talked about triple-digit levels while making country-specific deals there. And we've even seen this week on auto tariffs, he agreed to 15% tariffs on autos, but we haven't seen that actually be enacted even as all these other duties have come into place. We had the Japanese trade negotiator in town this week to try to kind of get clarity there, but we have no formal word there yet. So even if we don't have a formal sectoral announcement in the coming weeks, there's going to be a big push for clarity on all these different fronts as well.
Ben, thanks a lot. Lots to keep track of. Coming up, we're going to catch you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's top trending tickers. We are watching Under Armour, Tesla, and Wendy's. First up, Under Armour's second quarter forecast fell short of analysts' expectations. Still, elevated inflation and tariff pressure are continuing to weigh on North American demand, complicating the sportswear maker's attempted turnaround efforts. Those shares taking a hit of 20%. Remember, Under Armour sources about 30% of its merchandise from Vietnam, 15% from Indonesia. It said back in May it planned to raise prices to offset the cost of tariffs. Next up, Tesla disbanding its Dojo supercomputer effort as the team's leader departs. That's according to Bloomberg. The remaining Dojo workers are being reassigned to other data center and compute products within Tesla. Already, more than 20 employees have left Tesla's Dojo team to join the newly formed AI company Density AI. Dojo was once a key part of Tesla's AI vision. The supercomputer was intended to train AI models for the company's autonomous vehicles and its Optimus humanoid robot. Finally, Wendy's shares near a 5-year low after the burger chain cut its profit outlook. The company blamed continued weakness in the U.S. market, where sales fell for the second straight quarter. International sales, meanwhile, did rise nearly 9% during the quarter. The results come after rival McDonald's reported a rebound in U.S. sales during its most recent quarter. And as always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, stocks are poised for weekly gains to close out a busy few days of tariff and geopolitical news. Earlier this year, concerns about U.S. economic growth prompted investors to seek gains in overseas markets. Now, months later, the U.S. has returned to records, so is now the time to pare back international exposure. Joining me now is Adam Coons, Winthrop Capital Chief Investment Officer. Adam, thanks for being here. So we did have this big movement into international, and indeed, most of international and as a group has outperformed the U.S. this year. Even if the U.S. is at records, international in many cases has done better. Is now the time to pivot back, though?
Yeah, I mean, it's kind of one of those stories similar with value and growth stocks where uh, those kind of themes can have a run in a short period of time. But when we look at kind of the overall landscape for investing, the U.S. still is the best place overall. There are pockets internationally that we still like, but as a whole, when you see the outperformance and the delta between the two, I think at its peak was around 17%, meaning that international was outperforming the S&P 500 by 17%. That is a historic difference. Like I said, over the last decade, U.S. stocks have largely outperformed. And I think a lot of investors were obviously waiting for the moment when that would break and thinking that's going to continue. But when we really look at valuations and economic data, the outperformance is really tariff oriented from the U.S. And then obviously you've got a lot of countries in Europe that are instigating more stimulus. And so that made sense why you saw international stocks have the performance they did. But like I said, long term, we think that will converge back to reality, which is that the U.S. still, like I said, has more growth. Overall, consumer spending is much greater here. So we use that as an opportunity to take a position to invert that, overweight U.S. stocks and underweight international after we saw that big peak. And you've seen that collapse from around 17%. Now we're roughly about 13% difference between U.S. stocks and international. So the trade's working so far, and we think that will continue for the next 6 months or so.
So you think, in other words, that international could continue to outperform for the next 6 months, and then you'll see a reversion to sort of near-term historical norms?
What I mean is that over the next 6 months, you'll start to see that actually tighten. It doesn't mean that that international stocks are going to come down, or it could kind of come in either direction. If we did see an economic downturn just globally, what we're saying is that international stocks would actually probably come down faster than U.S. stocks. Or conversely, if we did see kind of a continued expansion, is that the U.S. stocks would probably outperform. So yeah, we're actually saying in the next 6 months or so that you will see that narrow the difference between the two.
And Adam, let's dig then into what we're seeing just here in the U.S. We've heard from a lot of consumer-related companies thus far. We're going to hear from more retailers in the coming weeks, but I just mentioned the likes of Under Armour and Wendy's. Yes, you could argue they've got some specific stuff going on, but we have heard from a number of consumer companies that they're seeing stress, particularly with low-end consumers. What does that mean for the U.S. economy and, by extension, markets and your investing strategy here?
Yeah, I mean, you have to pay attention to this. You have to keep in mind that labor data is extremely lagging. So anyone who's trying to use the employment numbers as the guide for if the economy is doing well or not, you're behind. And so obviously we're already seeing the labor data weaken, which tells us that we're kind of already in this, and this is obviously being fortified by the fact that earnings are coming out. And like I said, it is sometimes difficult because there are a lot of company and theme specific shifts with the consumer, where their just preferences have shifted. And I think that in large part could be at play here with a Wendy's or Under Armour. But the underlying fact is that consumers are having to tighten their belt, because we've talked about it, is that credit card debt is at all-time highs, and at the exact same time that the amount is at an all-time high, so are the interest rates they're paying on that debt. And so just the levers for the consumer to remain as strong as they have, and I'll give it to the U.S. consumer, they have remained extremely resilient, and that's why this cycle has been extended for much longer than a lot of economists called for. But when you look at, like I said, the jobs data, we are seeing a weakening there. I think that the consumer has kind of hit the proverbial brick wall. And so you will start to see a pullback, in particular in specialty retail. You'll start to see those numbers start to pull back. And in the real specialization like a Lululemon or an Under Armour, you're probably going to see more and more pain there, because that's the first place that a consumer is going to cut.
Adam, thanks a lot. Good to see you. Have a good weekend.
Thank you. You too.
Coming up on Yahoo Finance Opening Bid, our executive editor, Brian Sozzi, the host, is joining us now. Soz, what's coming up on the show?
Coming up, Julie, we have two power player blocks. The show's going to start right off with Groxio. They are the upstart AI chip company trying to take it to NVIDIA and AMD. Psyched to talk to them. Also, later on in the show, Julie, we're going to talk to Chime CFO, first earnings report since that company went public in late June. So we're going to dig into all things Chime.
Yeah, I did this pop quiz for the team yesterday. I think I'm going to stump you. Do you know the origin of the word grok, Brian Sozzi?
Does it have something to do with a mutant Ninja Turtle?
It does not. Oh. It has to do with a 1961 novel called Stranger in a Strange Land. More offline.
Julie, I'm going to stump you. What's the most sought-after item on the Wendy's breakfast menu?
Some kind of egg wrap?
I actually don't know it either.
All right, that does it for Morning Brief. Much more ahead on Yahoo Finance, including Brian Sozzi.